Hello, traders. Very good morning. Broadcasting live from Mexico City. My name is Alberto Alvarado. Here is 8 a.m. in the morning. That means it's 13 hours GMT time. Today is Wednesday, August 10th, 2016, and it's my pleasure to welcome you to my usual and weekly webinar through binary.com. And first of all, I'd like to thank binary.com for allowing me to approach to all of you my insights on the market and that you can find some inspiration when you're trading after listening to what I have to say here. And with some luck, this could help you to imagine and see through my eyes how I read the markets. Well, as you already know, my webinar series is called WoW trades. WoW stands for week over week trades. The picture that you see, the person that you see there is me, myself, Alberto Alvarado. And without further ado, and I believe it's just time to start the webinar because we have a lot of things to talk about. How about something interesting to read? So here we go. A little bit about me. I know that you already know some of these facts because when you sign up, you see this information. But I would like just to pinpoint some interesting points. For example, I'm a self-made trader. I live in Mexico City. I have more or less 10 years of experience. I started at 2005 with a live account with some inherited money that my grandfather left me when he passed away, and it took me less than a month to wipe it out completely. But at that time, I had the opportunity to know, and I was completely hooked to the markets, and I realized that I really wanted to make career in trading, and I decided to take it to seriously my personal training. At that moment, I had to do it all by myself because we didn't have a lot of tools that we have now, and even though at that time, broadband was already popular. We didn't have some of the tools that you can find at this moment if you are starting your trading career. So I decided to give it a shot again, and more or less in 2007, I started grabbing some of the profits of my approach. And then it came the 2008 crisis, and then again, my account was completely wiped out. So I really had to take the decision to leave it, to quit it, or continuing. I decided to continue, but after the 2008 crisis, I realized that I needed to do a major shift and overhauling on my approach to the markets, and I decided to include what I call intuitional elements, subjective elements, creative elements. And it ended up working very, very good for me. And what you see here is a result of all of that. So in the technical side, I use free tools like MACD, stochastics, RSI. I don't believe in using custom indicators or buying indicators or buying robots because I strongly support the idea that the one that needs to adapt is the trader and not the tools. So, that's pretty much about me, and I believe it's time to start. Value-added services, it's a section that so far is not active. All my services are completely free. You can see in the webinar, nothing has cost. It's completely free. Everything that you see here is for free. But I am convinced that with time, when people start knowing and realizing about the value of the information that you receive here, spontaneously people should start asking for more specific products, like, for example, personalized trading, more in-depth analysis, etc., etc. So I would simply like to first show people the information, then they realize the value of it, and then spontaneously they start asking for products. In the meanwhile, I would like to ask you, and please that you go to my free YouTube channel. You can go there and subscribe. Uh, you go to YouTube, you type IVB's Trading Room channel, like you see here, and then this picture will show up, and you click subscribe. Why I ask you to do this? Well, for the ones that been following for the latest webinars, you already know that at times I use that channel as a communication bridge, meaning in binary.com, every week I deliver webinars. But of course, you already know that the markets can change in the snap, can change widely one day to another. So maybe waiting for 1 year to wait to see if the trade, if we decided to open a trade, to see if it is profitable or not, etc. Maybe waiting a full week is not the best deal. So there you can, if there's something that needs to be updated, if there's some switch in sentiment, some tweak in the direction of the markets that we commented here, there is where you can find the updates. So I strongly suggest you that if you're interested in keeping and receiving the updates at the time they are needed, not on a weekly basis, go there and subscribe. It's for free. At times I could upload a small podcast. You can listen to it, or I could simply comment on a previous video about some updates, etc. So go there. It's completely free. Well, today's agenda, it's an interesting one, as you already know. We had last Friday the non-farm payroll number in August 5th, Friday, August 5th. And it was well above the expectations. It created a lot of hype. It created some kind of volatility. And we will continue analyzing the pound dollar, the cable, and we're going to analyze the impact that had on the cable to see if we can find price action opportunities. That is the number 2, okay? So we are going to analyze how the number looks like, what you can expect in the future on regarding to the non-farm payroll number, what was the fundamental dynamic impact in the cable. Then we will go to the live charts to see if it's possible to open some kind of trade, or at least give you some insights on whether elements you should be looking at if you decide to open a trade or not. The fourth point is review adjustment of previous week trades. We don't have any open trades at this time, so we were just going to skip that point. And the last point is a question and answer. So if you have some questions during the webinar, feel free to drop them in the chat box, and at that moment, I will be able to answer them. So here it is. The non-farm payroll number on Friday was a number that was, at least for me, highly anticipated. I was expecting a very, very good number at some time before this year end. On some side of the fundamentals of the United States economy, maybe the non-farm payroll number, some other important number. The non-farm payroll number really, really broke, was well above the expectations. The market expected 188,000 jobs added to the American economy, but it ended up being 255,000, less than the previous month, but well above the expectations. For the ones following me, I'm just, you know what I'm talking about. For the ones that are new, I'd just like to signal and to tell you that this blue kind of Bollinger Band that you see here is what I call fundamental dynamic levels. This means that this is a kind of Bollinger Band, but instead of using only price or some sort of data to plot, they factor in a lot of fundamental numbers. So this kind of Bollinger Bands, let's call them that way, are really hard and really difficult that they move and that they respond to volatility. So that is why I use that in here as a framework that could help traders to know where they're standing on before opening a trade. whether if you are a bull or a bear on a specific thing that we comment here, having this as a framework will help you to avoid the most common mistakes, uh, for example, I don't know, being caught up in volatility. That's the idea. Sometimes volatility could lead you to misunderstand some data, but having this as a parameter, as a framework, you can use it as a compass. So you at least know where the north is, so you get less confused. Pretty much what we need to say about non-farm payroll number, that this is no surprise, at least for me. Even the market are still pricing a 50-50% Fed rate hike by December. Before this non-farm payroll number, the probabilities were kind of 35%. I've been holding the idea that the next rate hike should happen before year end or at least in December. Why December? Because it's no-brainer. We had the latest Fed rate hike last year on December. So if the Fed is likely to do it again, it could be on December. It's like, okay, they just did it in December, they could do it in December again. I've been following closely the fundamental data of the United States, and every time I get much more convinced that there is still very, very small room to maneuver for the American economy if they don't touch the rates. It is necessary that they start moving from this monetary policy near to 0% and start gradually adapting that to uh, the new conditions of the worldwide economy. And yes, even though the worldwide economy is not facing precisely the best outlooks, for some reason the United States manages to deliver good results, and they need to respond to that. Maybe they have delayed the rate hike because of Brexit. They just realized that yes, the markets reacted with kind of panic and fear and a lot of volatility, but we can say with 100% of certainty that at least the markets are not reacting anymore with fear or panic. So yes, the conditions are just coming back for the Fed to help them to decide on increasing the rate hikes, increasing the Fed rates. So the bands that you see here are like they explain themselves. As long as the number is above this midline, that means that this could start going up and up. This is the latest 1 year of non-farm payroll numbers. Okay, as you can see, we can see a slight bearish trend. But as I just said, the more you have numbers above this midline and the higher they get, the most likely this will start shaping in the other direction to the upside. So it has been a very strange for the latest non-farm payroll numbers to have them up below these levels. Okay, but you can see here that in February this year we had the first above the midline. Some of these numbers were above expectations, but that was not good enough to believe that we could start thinking that the American economy is entering in bullish territory again, in expansive territory. But apparently, these latest 2 months of data through the non-farm payroll number gives really few room to doubt. And now, even the most skeptic of the analysts that maybe were saying that the rate hike will happen next year, maybe March next year, or even June next year, with these numbers, they need to reconsider their speculations, because with this kind of numbers, the Fed cannot wait a lot of time before hiking the rates. And again, the circumstances are just converging into this opportunity to do it in any of the next months. I wouldn't rule out to have it maybe in October, November, but For me, it's not 50-50. For me, it's 100% sure that it's going to happen on December, and that's the longest that it could take to have the rates increased. The markets are reflecting 50% because we are still far from that date, not because, I mean, you cannot have 100% of certainty of having the Fed hiking the rates in December at this moment in August, because that wouldn't make sense. But yes, having that increase from 35% to 50% after this number gives you a very good idea how important this number was. So yes, if we have, for example, the next number above this line, well, it is a no-brainer. I mean, for the trend that is that we are having, maybe we could have the next non-farm payroll number more or less at these levels, at 2,000, more or less, a little bit less. I don't know so far how much is expected already for the next non-farm payroll number, but we will know it in some days before. But yes, what I believe is that maybe the markets could be expecting something above 150,000 or 175,000. So yes, I believe that we're going to have a number circa to 2,000, a little bit less, justifying and giving even more momentum to the potential Fed rate hike in December. So well, we are kind of officially getting out of tentative recession in the U.S. We really didn't get that severely in the U.S. And apparently we're now heading into expansion territory. So yeah, that's pretty much about it. We can talk a lot in a very detailed ways on that report, but we as traders, we are interested in knowing how to exploit this in our favor, opening trades, right? So if you will have the Fed hiking the rates, it's a no-brainer. The United States dollar will gain value. So yeah, we are starting to shape the trading scenarios that we could manage during these webinars. The next step is to see how, in fact, this number affected the pound dollar. We're going to start reviewing the fundamental dynamic levels, and after we're going to review the actual traditional chart so you can see the exact reaction after non-farm payroll number and overall the reaction during these last 3 days of this week. We have had a lot of important information through price action and technical analysis that, at least in my opinion, are still holding a bearish strength in the cable. If for the ones that would like to know more about how my bias has changed on cable, you can go back to the YouTube binary.com channel and look for my webinars that are uploaded there, and you can evaluate and start listening to the webinars, the last one and the week before, and you can start having an idea how and why, the most important fact, why I have changed from being a very active bullish view on the pound dollar to having and holding now a bearish view on cable. But in bottom line, what I can tell you is that the gap that we have on cable after Brexit was not able to be closed. So that for me means a very severe signal to the downside. I was holding a bullish bias after having and detecting previously the reversal point at 128.50. The market, in fact, stopped dropping at 1.28, and then the market started going up. But what I was expecting is that gap should have been closed last week or 2 weeks ago, and it didn't happen. So, yeah, my outlook changed. I've been explaining that into detail in the latest webinars. You can go check them out if you want. But well, this is a new fundamental dynamic chart that I'm showing to you because I've been using the same ones of pretty much 1 year from now. And yes, so we've been analyzing how the price have been reacting to the upper Bollinger Dynamic Band, et cetera, et cetera. You can go back and check what I mean exactly with that. But well, this is the new one. This is Brexit, okay? This is the drop after Brexit, and everything here is post-Brexit. We, during the webinars, said that the potential reversal point, or at least that the point that could stop maybe in the short term or even longer term, the drop on cable should be the 128.50. Actually, at this point, the market got to the 180.28 and started going up. But here, as you can see, it stabilized. At that moment, I was showing to you the fundamental dynamic level that at this moment in time was crossing above this level. So we anticipated here a potential bearish movement on cable that actually happened after having the Bank of England reducing the rates. By the way, we anticipated correctly the last two movements of the Bank of England. 2 months ago, I said here in the webinars before the Bank of England decision that what I expected is that the bank was not going to touch the rates, and the reason was going to be that there was not good enough information to do that. And they did exactly that. They didn't touch the rates, and they argumented exactly that. One day before this last Bank of England decision, I anticipated here, well, what the market was anticipating already, that yes, the Bank of England was going to cut the rates. I was argumenting in that webinar at that time that the precise reasoning was a change of attitude of the Bank of Japan on stimulus packages, switching from bias of there is not enough money to stimulate the markets, even if we wanted, to the bias of we're going to stimulate whatever it takes. And then having the Bank of Australia cutting the rates gave me the signal that in fact the Bank of England is reducing the rates, not precisely because they already have the enough information to cut it, but because they are anticipating what the world economy is heading to. That, in my opinion, is at the first tsunami after 2008 crisis. That should start in the next months and should last like 1 year. So I believe that Japan, Australia, and Bank of England are adapting and preventing and taking decisions anticipating that scenario. In this case, the Bank of England, they still don't have that confirmation of being justifiable to reduce the rates. So yes, we anticipated that correctly. And by the way, at that time, we were commenting here that the logical potential thing to do at that moment, this is the moment before the Bank of England decision, the smartest thing to do because of the fundamental dynamics was to expect a movement to the downside. It was like everything was signaling and pointing to that direction. So we had this drop. This is the Bank of England decision. And then here is, since this chart is only considering the closing prices, you cannot see that in a lot of detail, but we're going to check that out in the regular charts. Okay. So here the market dropped, stabilized here, and then we here had the non-farm payroll number last week. So as you can see, even though if we analyze the Brexit moment up to this moment, and we see the fundamental dynamics, we can see that this precisely consolidation zone started moving gradually up the trend that was initial to the downside. This is what I meant, that this kind of analysis, fundamental dynamic analysis, it's reliable because they don't just change because of some crazy volatility. They need to start factoring in different data gradually to start shifting and moving in a very smooth way. So yes, the market stabilized here, shifting a little bit to the upside. At the moment we anticipated here the bearish movement was because at that time we were considering that here the chart that we were using was at these levels what was passing a fundamental dynamic level that should work as a natural and fundamental resistance. We were touching the upper line of a supposed double bottom formation in the 4-hour chart in cable. We were analyzing a selling signal that we had from here and how the market started moving and having certain price action and overall the volumes that were indicating us that the market was heading south. Actually, it did. Now you can see the market used the 1.3 as a support, and now we need to see if this trade that we commented, a short trade here, it's a smart thing to keep that bias in that direction or not. Anyways, if you decided to profit from a short trade here that we commented, the wisest thing is to maybe take half of the profits at these levels. Yes, if you open to put trades in binary.com, maybe you just close one and wait for the other maybe to consolidate to see what happens, etc. I will keep you updated here or in my YouTube channel if I change my bias, etc. So you can have an idea on how to manage, in this case, profitable trades, okay? So here we didn't open them live because we were in a potential very volatile situation. But yes, we did comment that the most logical thing to happen was to the downside at these levels before the Bank of England decision. This is the same chart, but a very, very closer window of time. This is more or less where the bottom here, where the price retested the 128 and then started moving up. And I want you to see how, even though it's a smaller time frame, the fundamental dynamic levels gradually start moving. And now it's pointing down convincingly, and then look what is happening. Even though we're having the 1.3 as a support, as a take profit support, etc., should be expected at this kind of levels, the price is below these levels, and now it's pointing down. So yeah, we're going to analyze a little bit more in depth in the next minutes why I am considering that this should prevail, the bearish outlook should prevail. But I need to watch closely the price action every day to see if the market starts telling me that maybe it's eager to use a 1.3 as a true support, maybe to try to close now the 137. This is the traditional charts that I use. I've been using a falling wedge. The latest webinars, you can go and check them out. They run from 2 years ago, but I just decided to maybe close a little bit the, how to say it, the time span that I analyze, so you can check out exactly what I mean. This is the daily chart. Here you can see 1 day, cable, pound versus dollar. We have an ascending triangle with a relative quality of 57%. You can see it here. The most important fact is that this upper line, do you remember that I just commented that we decided to short here because at this moment we had in the 4-hour a potential double bottom formation? Well, that mutated into an ascending triangle because it failed to happen. Okay, but these were more or less the scenario that we were facing here, and here we commented here in the webinar that the most likely thing was this to fall. Okay, and look what just did. Okay, so now you can see that this ascending triangle that runs precisely, and this is the strength of, the real strength of this triangle is that this runs from Brexit. Before Brexit, we almost, we got to here in the daily chart, we touched the upper Bollinger Band of that, of the daily chart, and then we sold off, and we had this weekend gap that we were not able to close. Okay, so the market, we anticipated that the correct price for this that could have decent probabilities to stop the price at least for some time was at the 128.50. Actually, it came through the 128 and then started going up. Then we decided here at this level that we that my bullish sentiment was denied because we had here a support level that, in my opinion, shouldn't have been touched. So it was, and we received a selling signal, and all this movement to the upside were good opportunities to sell. Then at this moment, the price got very close to that upper fundamental dynamic level, and then the most likely thing was that this sell signal that we received days before came to the 100% of probabilities. So yes, the market did this, and now it's lying on the lower Bollinger Band. We're having this day these bullish movements, most likely because we have the 1.3 is the no-brainer take profit target for a lot of traders that decided to short here. The 1.3 psychological level. And yeah, and I really don't expect any real demand on these levels, but we shall wait and see. Actually, everything is aligning. Everything is not favorable for a cable, and we have everything favorable for the United States dollar. So it would make no sense to have, at this moment in time, a bullish momentum rebuilt after not being able to close this gap. This gap means severe weakness on pound. In order to avoid this to continue, maybe a movement to downside, the price at least should have been able to close this gap, but it didn't. And now it's even looking even worse because here at least we have kind of bullish momentum in the daily charts, but now we're just having a cross to the downside. So this doesn't look pretty for the bulls. Okay, this is the 4-hour chart. Again, this is the Brexit. This is a 4-hour chart. This is clear the drop, the sell-off. Then here is the gap, the weekend gap. Here you can see way more clearer the line. At that time here, we received that selling signal here. It was here. Yeah, I believe it is. Yes, it was here. You can go back and check in much more detail what the story revealed here. Here we have the best labor data of the latest 10 years in the UK economy. Then we have the worst PM data in the latest 7 years. It managed to retouch this level that was like the no-brainer bullish limits. So we have here the price touching this, indicating us weaknesses, and the market was going to be prepared to a sell-off. Actually, it did. It started going up, giving chances for the bigger players to start shorting and getting rid of bullish trades, and then the market then boomed and suddenly came back. This big black candle is the non-farm payroll number, and this is what has happened so far. I only put this as a reference so you can have a context of the 4-hour chart, but as you can see now, the MACD levels, we are at below zero. So everything is signaling again that the validity of that bearish signal that we received, by the way, here, the price that is more or less being tested here, is still valid. We're going to explain a little bit more in the next minutes about that. But well, this is how it looks like. And even though we are retesting a psychological level, everything is apparently signaling that the bearish momentum is the way to go. But again, this is not a good price to short because we are hitting a psychological level. We should wait to see if we can find another entry opportunity. If you were not able to enter bearishly here when we were commenting that at that moment, the webinar, we need to wait to find the optimum level to short it in any case that we go short now. This is the 1-hour chart. This is the Bank of England decision that, by the way, look, this is real volume. This is not tick volume. The Bank of England decision generated in the 1-hour chart the highest volume even from Brexit. Not even Brexit generated this movement. Brexit was a complete fearful volatility of the unexpected event, etc. But it was not that bad. It was not going to be the end of the world, as the mass media was very interested in making you believe. But this is serious business. The Bank of England decision really, really had the volumes spiking. We had here the best, the number that I was telling to you, the best UK employment data. That, by the way, after that number, the volumes started coming into cable again after Brexit. Then we had the price retesting this low. Okay, it was a no-brainer. If you have a news that was able to generate two more times volume in anything after happening, that means that that level should be very important. So yes, if this news that was delivered here caused this movement with huge volumes coming in, the market should respect this level and not look back, but look what happened. So for me, these were selling signals. We have this bullish movement, but on lower volumes. We were commenting that during the webinars, by the way, and well, that is why I was expecting the highest of the probabilities for this to sell off at this heights. Bank of England helped. We anticipated correctly what the Bank of England was going to do in this time. Then this is the non-farm payroll volatility. Look at the volume. It's a very decent one. It continued falling down below the 1.3, and then we had some sort of take profit. But here has happened something interesting. The mass media was trying to explain today that this bullish spike was due to a suppose the traders are reconsidering that the Fed should maybe not increase the rates this year, etc., etc. But when you go to the volumes, you realize that the real volume on this bullish spike is very low. Actually, it's ridiculously low. We start having this selling momentum on much more higher volumes. Then we're having the price retesting the bulls on descending volumes. So basing from this date, after having this latest UK best labor data in the latest 10 years, volume has worked to signal us the way. Why? I don't know. It simply worked that way. Because after Brexit, volumes evaporated from pound because was a lot of uncertainty. So there were volumes traded, but not that much. Then volumes came in after a news, regaining the confidence of the investors and traders and etc. And they are, since that date, this one, the volumes are telling us pretty much everything of the story. So, well, until we receive the confirmation that the volumes stopped being that important, we need to follow the market. And the volumes are telling us that this movement to the upside is not that big deal. Okay, so let's just keep our head cool and not being tempted that just because it's a psychological level, there are real possibilities for having this to rebound to the 133, 134, because it can happen, yes, but it will take time. It shouldn't happen all of a sudden because nothing is pointing that way. And if that happens, the market will let us know that usually in advance, some days in advance, thanks to the price action, etc. And I will keep you updated if that happens. But up to now, and due to all this information that I'm been talking about, the bearish outlook that we received since here, that was 100% intensity here, is still valid. As you can see, it has dropped more than 300 pips, almost 400 pips since here. So yes, here take half of the profits, a good thing. And just wait to see how the price behaves from now on. I believe that this should, if things prevail and if we don't receive anything outrageous from the market, ridiculously deviated of what is expected, meaning if we don't receive the best or worst some fundamental data by the United States or the United Kingdom, maybe the trend should prevail to the downside, and I expect that at the end of this week, the price should close below this low. But we need to wait and see the price action. Let's go to the live analysis. Well, this is, again, the 1 hour chart, the cable, and look how the price is reacting. This is exactly the power of the volume. We had this big spike on very low volume. Do you see it? Then we had this sell-off on higher volume. Then we had this, again, this retest of this high on lower volume than this. That is why the market is reacting to the downside, because the volume is telling you most part of the story now. There are no real volume of people buying this thing. And as long as that happens, and as long as the volume keep indicating us the right way to go, well, there is no any need to try to get into wishful thinkings and trying to reinvent the wheel. Volumes indicated us correctly the selling spirit of the cable since this date. Okay? And since this date, the volumes, as you can see here, the 1 hour, let me draw it, draw the line. This is way more clear, right? Look at this, the volumes descending on the moving ascending. That's a divergency, a volume divergency. Okay, and look what happened, the Bank of England decision. We had this move, this volume getting very, very high. And then we had the non-farm payroll number breaking again that trend. Okay. So we have the non-farm payroll number indicating us. Then we have the price not recognizing this support, these levels of support on correct volumes. So the market continued going down and down. Up just to this moment, the volumes are breaking up again. But look what is happening. The first breakout was in this bearish movement. Then we had this movement to the upside, not being as high as the previous one, but still breaking it. But the explanation for me for that is that this is a normal psychological level take profit target. I mean, if you're going to take a profit, think like the big guys. If you have loads of lots, loads of options open in a short trades, for example, here, and you want to take some profits out of the table, the most likely things to take them in the 1.3, right? Is like the basic 101 trading lesson. So yeah, we could expect here, but look at this. At the moment, this really touched the 1.3, the volumes didn't react to the upside. Here it was a touch, and then the volume was rejected to the downside. So yes, it's pretty much dead. Demand at 1.3, it's pretty much dead. So that's the only thing that I can say about this. We cannot expect that something soars from this move, from this price with these conditions, and then to have maybe a recovery to the 1.33 or something with these conditions. No, we need to see volumes, how they behave. But as you can see here, the latest price action on this kind of volumes, now the price action is signaling us that the MACD is having a cross to the downside. And the MACD, it's well below, it's entering to oversold territory. So this is not looking good for the bulls again. If this is going to happen, what I believe is that the market should at least retest this level and then maybe wait how the volume moves, and then maybe we could have a rebound. But I don't think so. I believe that this is heading to the 128. and even to the 125, 24 section. And if things are in the way they are now, we don't receive anything very outside of what is expected, like having the best or the worst in the latest 7, 10 years data. This should even get to the 1.2. Now it's not a good time to short it, to open a put trade, because as you can see, we're very close to the psychological level. We could have, for example, here, yes, we can have a drop here, but then a stabilization at 1.3. And that could last even a week. So it's not the best moment to open a short trade here. If I find some interesting opportunity, as I just said, go to my YouTube channel. I will keep you updated there with a podcast, with a comment there. Just go there and subscribe. And I believe, okay, yes, I always forget to do this. Let me do it again, share my screen again. Okay, this is what I wanted to show you. I'm really excited about a new function that binary.com added like a month ago, a month and a half. That is this shop thing. If you haven't tried, go there and check it out. When you click on that, you will have opened what is the marketplace of binary.com. You can get very nice t-shirts there, you can buy them, etc. But the real power of this is that binary.com smartly is helping traders and developers and webinarists to get together and to get closer to offer value-added services to traders. The exactly same thing that I commented at the beginning of the webinar, that I was waiting for people to demand on them at the moment they want. But well, it was like I had that idea, but I didn't know exactly how to do it. And then binary.com comes with this great idea. So this gets me really excited, because well, one of the best things that you can check out in the shop for free is the binary.com bot. In few words, this is a bot that could trade automatically on binary.com. If you configure your setups, etc., you can open trades there automatically without your intervention. So if you are into algorithmic trading or that sort of stuff, go check it out. You here have the mobile applications, the web trader application that I use every time that I trade in binary.com, that it allows you to trade directly on charts, etc. You have some useful information by other webinars or people that collaborate with binary.com, etc. So here you have other products from other developers, webinarists that offer you the opportunity to go and increase your knowledge on the markets. So how I'm going to use this shop? Well, I will eventually approach to binary.com to let me know how could I then start developing maybe, I don't know, an application. I don't know. I just need to figure it out. But I'm real excited because this is a really smart move by binary.com. This will allow traders and developers to respond to real demand of the traders, and we as webinarists to respond to real demand of the traders offering services or applications, etc. So go and check them out. And I believe it's time for the questions and answers, if you have any. Let's give 1 minute. Okay, well, apparently we have no questions so far, but feel free to send the questions to binary.com, and they, of course, will let me know if you have any doubts, comments, etc. Or the best way is go there to my YouTube channel that I commented at the beginning of the webinar. Go there, subscribe to my free YouTube channel, and you can throw me their questions, and we can interact there, have some fun, trade some trading insights, etc., etc. And if you like this webinar, you can go to the recorded version tomorrow. This is going to be uploaded. You will receive the notification, your email, or just go to the YouTube, binary.com YouTube channel, and check out my series of webinars called WoW Trades, or the Spanish version that is called WoW Trades again, that I deliver the first Thursday every month. I deliver the Spanish webinars. I have there uploaded like 3 videos, I guess, or go and check out the English ones. I believe this is the 8th one or something like that. So thank you very much for showing up. I really expect that information delivered here was useful for you. And remember that I expect you next week, Wednesday, August 17th, 2016. I expect you at the same time, same place. And remember to trade safe, be safe, and bye-bye.